Welcome to the Property Profits Real Estate Podcast, the show where real estate investors talk strategy, capital, deals, and growth with your host, Dave Dubeau.
Well, if you've been in and around real estate for any length of time, you've heard of these mysterious things called family offices. It seems like that's the pinnacle a lot of operators want to get into. They want to crack the code. They want to work with family offices in order to fund their deals. They want to get to a point where maybe they have their own family office. Well, pay close attention because today our guest is Mike Kron, and he's been operating and managing a family office for quite some time. He's taken that family office from, I believe when he started, there was 2,500 units of properties they had going. Last time they counted, it was up to 14,000. So he's definitely helped them grow the portfolio, and he knows a thing or two about this. We're going to be talking about family offices. We're going to be talking about raising capital for funds. So Mike Kron, welcome to the show. Great to have you.
Dave, great to be with you.
So how long have you been operating or running this family office for, Mike?
I've been with him or with the family for 33 plus years.
Wow.
And by full disclosure, it was my wife's father who kept pestering me to come work for him. He needed somebody to help him grow. And I was in my fledgling legal career and not all that happy doing that. So I was more than happy to come over and pick up the real estate trade and help him.
Well, I'm suspecting if the gentleman got to the point in his business career where he could run a family office, or he needed a family office, chances are it wasn't 100% nepotism the reason he chose you. So he must have seen something in that young Mike Kron to invite you on board. Did he bring you on board right away to run the whole thing, or did you start kind of at a lower level?
You know what? I came on as his chief operating officer and general counsel with the background that I had in law. It was easy enough for me to do that and take over a lot of the management of the deals and other things that we were doing. For instance, is he had no idea what a 1031 exchange was.
Oh, wow.
And at the time I joined him, we had a lot of property in California and some not so attractive areas. And we were starting to buy property in Texas. And early when I got there, we started to buy property in the Phoenix market. And, I was able to show him how to sell his properties and not have to recognize the gains, something that everybody sort of takes as a given now.
Yeah,
that was 35 years ago. It was a little different.
You must have been a hero.
He thought that was the greatest thing we had ever done. I had to explain to him that you didn't, you had to carry over your basis, but
bottom line, he
was still good with it.
He was still good with it. Okay, very good. So 33 years ago, what did the portfolio kind of look like? And fast forward to today, what does it look like now? Like what kind of assets, what are you holding in there?
We really had a bunch of C properties that he had acquired either with family money of his family and or things that he had bought around the California area. He had just started to buy some stuff in Texas. And if you think back to he had an event where he ended up with a lot of money in the late 80s. And if you think back to the late 80s, early 90s, we went through a period that was not that great for real estate.
Yeah.
He was buying assets from the alphabet soup of governmental agencies that seemed to own everything back then. It just wasn't a real attractive portfolio. And when I got there, he started looking at some better properties, and I started to push him into things because we could buy an A property in Arizona, and this will show my age. We could buy that for an 8 cap.
Wow.
And in California, it would have been a 6 cap. And what we were selling was 6.5, 7 cap.
Okay.
So we were able to make money upgrading our portfolio, buying newer properties. And I sort of pushed him down that path. And he was a willing participant. I mean, he started to look at it differently and really enjoyed what I was bringing to him. And we started to acquire A properties. We've developed 4,000 units of our own.
And I'm assuming these are all multifamily properties. Is that correct?
All multifamily.
Yeah.
And what we develop is all A+ property. I mean, it's really high end. It's designed for the renter by choice. That's not our only renter, but we design it for somebody who doesn't want to own a house but wants to have all the nice things, the athletic facilities, the game rooms, the pickleball courts, the tennis courts, all those good things. And we just have always been on that program.
Got it. Smart.
Yeah.
So we were talking a little bit off camera. You're also starting something new for you in the sense of a fund. So maybe tell me a little bit about that, if you would.
Yeah, a few years back, a buddy and I, we had been talking about this for a while, of starting our own real estate private equity group. And I use the word fund loosely, where it's really formed as a limited partnership. But we wanted to get into something different and build up a presence, understanding that at some point in the future, the family would have passed and there was going to be a big multifamily portfolio that I was going to want to handle from a private equity side and raise money to acquire. So we wanted to start our own group to start down that road and build up a presence and an experience and track record to be able to go on to the bigger steps later. And, we really settled on raising money and offering a net lease, single tenant net lease retail platform.
Okay.
And it really was no more difficult than I wanted to do something that was going to be easy to execute, relatively safe for investors. I've been in deals. You've probably been in deals. All the listeners have been in deals that it sounds great going in. You give the sponsor a chunk of money and that's where it ends.
Yeah.
And you never see anything coming back. And I said, I don't want to do that. I want to start something different. So we went in, and in our area, the core real estate retail, we're dealing with tenants like 7-Eleven, O'Reilly Auto, Dollar General, CVS, all large high credit tenants on triple net or sometimes double net leases. We can produce a 5 to 6.5% cash flow fairly easily. Now, when do you start this? That was always the question. I would have loved to have started in 22. But if you remember, that's when the Fed decided it was time to start raising interest rates, and not a real good time for the kind of thing that we're doing. So we waited patiently, expensively, for time to pass, and finally launched with our friends and family money in 24.
Okay.
25 was still a little rough for us because we were still competing with treasuries. I mean, the returns looked the same. There wasn't the upside in treasuries, obviously, but this year things have, I think the atmosphere has changed out there. People are out looking again. People are actively searching out good alternatives. Shockingly, retail has come back into vogue. Everybody thought it was dead. And all of a sudden they're like, wow, retail's a really good place to be. There's nothing's getting built. There's high demand, and that makes for a good environment. So we felt we were at a pretty good time.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
So that must be quite a switch for you though, Mike, because you went from like 30 plus years working for this ultra high net worth individual, the family office. Capital was not the issue. You didn't have to raise capital. You had capital to deploy. Now you've started a fund. You're out raising private capital, I would imagine, for that fund. What does that side of things look like for you? What have been some of the things you've taken away from that new experience?
Raising capital is definitely a different environment. I always say that I'm a real estate guy doing private equity. I'm not a private equity guy that decided I want to sell a real estate project. And, we've approached it a little differently than others. I sort of looked at all the fee structures that were out there, and I've talked to a great number of people, and I just shook my head. And because I know what the underlying numbers look like in the real estate world. And I know what happens when you pile those fees on top of it. And I just said, I'm going to do this different. I don't need to charge a lot of fees up front. We only charge a 1.5% management fee on asset equity deployed. That's it. And then we take our money on the back end. I said, I want to make my money because my investors made money, not because I've charged them all these fees to basically do nothing. I mean, there can't be a greater alignment than
especially on triple net lease properties. I mean,
right. There's just not the bandwidth. I mean, you can't do it. I was fortunate that, I'm a real estate broker by training. I launched my own brokerage. The gentleman who runs it has an infinite amount of experience in the single tenant, triple net world, buying, selling, managing them. And it wasn't a big learning curve. What I knew and what I'm able to carry into this is that I've watched real estate cycles for a long time.
Yeah.
I've got the gray hair to prove it. And that to me was more difficult to learn than learning what I consider to be a fairly basic real estate segment.
Right.
Now, if you ask me to do student housing or industrial, I've owned an office building I don't care to own anymore. That's a little different world. But the net lease world is a fairly straightforward world. And it's so highly correlated to interest rate movements that, the experience that I had watching the general real estate cycles and the general movements of the Federal Reserve and the 10-year treasuries, that made a lot more difference to what I was doing.
Yeah. But how about the capital raising side? Because you didn't have to do that before. So what have been some of your major learnings from getting involved in that? You started with friends and family, obviously, first.
Yeah.
Are you starting to move outside of that now?
Oh, we're well outside of that now, and have engaged several folks to help us get into family offices, ironically enough, and into the wealth advisor and RIA networks. That was really the hardest part. Somebody told me, it goes, you're going to wish you did 80% real estate and 20% capital raising, and you're going to end up doing 80% capital raising and 20% real estate. And that probably is not all that far from the truth. I'd say easily the biggest mistake I made was initially hiring an investment bank who shall remain nameless and giving them an exclusive, which they demanded. Yeah. And that took a year out of our equation, and it wasn't cheap to do it and really produce no results. Wow. And finally, I had to go to them and say, look, guys, you're great people. I'm sure you're very talented at a lot of things. This clearly is not one of them. If you want to continue, I'm willing to let you be an advisor to us on a non-exclusive basis. But you can either be non-exclusive or you can be not at all. And I had to end that relationship. And that, I should have pulled the plug 6 months before I did and just seen the writing on the wall. But not being familiar with the capital raise process, I wasn't sure what I should have expected. You want to have meetings, and obviously that's a benchmark for what you're going to do. And it just wasn't happening. And I've, more quickly learned that lesson. And now only have people with me who are actively getting me meetings with folks who either have capital or can lead me to people who have capital.
Right.
Right now we're working on being out and present at conferences and meeting with family offices. I've had several wonderful conversations with wealth advisors who really like what we're doing and have clients. I've got a couple dinners coming up next week. Nice. For wealthy individuals. So we're branching out to do the things that I probably should have done a while ago.
Well, better late than never, right? So do you, within the fund, do you have some triple net lease properties already in the fund right now, or are you just getting things set up for that?
No, we bought 3 originally.
Okay.
And then I sold an office building that I owned down in San Antonio because A, it was a good time to sell the office building and I didn't want to hang on to it much longer, but B, because I thought it was a wonderful time to do what I've been preaching to others to do, and was able to deploy another $4 million or so into this venture. And we've got 4 more properties under escrow right now.
Nice. So it's a going concern. Well, that's fantastic. So based on what you're doing, sounds like you're kind of dividing your time a bit between the family office and the fund. And you mentioned you got a brokerage. It sounds like you're a busy guy. Where are you seeing things going for you in the next couple of years, Mike?
You know, I've been spending, and I've had this conversation with my team, who my chief operating officer, CFO, and general counsel have all now taken on dual roles in both the family office and the Guardian venture that we're running, because they understand where the future is going. And what I've been able to do, you know, the apartment portfolio is relatively stable at the moment.
Yeah.
Because we're kind of waiting for time to pass for the next step. Mm-hmm. And the team is great. I don't really need to be involved on a day-to-day basis. You know, we came out of a situation with the founder, the patriarch of the family, who was a micromanager deluxe. And the team was really ready to like jump out of the starting gate when I said, guys, I don't want to be involved in every decision. I don't need to be involved in every decision. Come see me when we have big decisions, and I'll give you the direction we're going, and let's work that way. So I've been able to spend more time out meeting with people, looking at the long-term picture, both from bigger folks that I'll want to raise capital from when I bring the multifamily portfolio to market, and also meeting with people now to raise capital for the first net lease fund that we're doing. 2 years from now, I hope we're sitting back and starting the next fund. Okay. I really, we're able to deploy money pretty quickly because the deals in this space are ubiquitous. I don't have to hit home runs with the deals. I just have to get solid deals. Yeah. And there's plenty of them out there to get. We just have to find the best of the best. 7 to 10 a month is very easy. So I'm hoping that we're already fully funded, fully bought out, and then moving on to the next fund that we want to do, whether it's in the apartment arena or an offshoot of the retail arena. I'll see what the markets look like at that time. I'm not a one-trick pony. I don't want to be. I want to follow the markets and see where they're going and follow the various cycles.
Yeah, that makes a lot of sense. Fantastic, Mike. Well, as we're wrapping things up, who are you looking to connect with these days?
We would love to meet high net worth folks who want to get some money out, family offices who would like to get some money out into something different. Those are really the ideal sources for us. Mm-hmm. We're also looking at bigger players on the multifamily side, and we've been taking on several meetings with those folks, planning for the future and getting to know each other now.
I see. Makes sense. So if people would like to connect with you, what's the best way for them to do that?
They can either visit our website at guardiannetlease.com, or I'm happy to have them email me directly. I answer them, not a bot. It's mike@guardian-advisory.com.
Fantastic, Mike. Well, hey, thanks so much for being on the show and letting us know, kind of get a peek behind the whole family office thing, what you guys are doing, and this exciting new venture. So thanks for being on the show.
Absolutely. Enjoyed it, Dave.
All right, everybody, take care, and we will see you on the next one.
Thanks for listening to the Property Profits Podcast. If you'd like to be a guest on the show, apply at daveinterviews.com.